this thing. All right. So, okay, go on three. 3, 2. Hello, traders. This is Blake Morrow with Traders Summit, and I have Bill Baruch of Blue Line Futures, President and CEO over there. How you doing, Bill?
I'm doing great. Thanks for having me on again.
You know, it's great to have you. It's always fun talking commodities and markets with somebody like yourself that's really an active trader, and you have been for years. I always appreciate your input. And right now, probably more than any time, is important to get your input on some of these assets. So, what do you make about these moves that we've seen over the last couple of weeks?
It's been a fun market, it's been, but it reminds you on a day-to-day basis to keep your patience and, know your spots and stick to your game plan. But yeah, these are the type of markets you dream for.
Yeah, we love volatility. And I got to say, you've been really spot on about crude. And we talked about gold. We've been talking about gold for months, and we'll go look at those charts here in a minute, but gold finally looks like it's breaking higher, and the stock market's getting a little volatile. So this is a good thing. So let me ask you this before we start looking at some charts and talking about some of the specific subjects. How are you navigating through it all? I mean, have you been extremely active, or have you been leveraging up a little bit, or have you been paring back with the volatility? What have you been doing? How have you been managing it?
Really not doing a ton, in the last 2 weeks. I mean, really, we're pressing the gas in December and January, and then a lot came to fruition, a lot that we were imagining throughout much of last year. At this point, really sort of, looking at how things are unfolding and really looking for opportunity that's developing amid this volatility. Right now, looking at positions in long treasuries is really one of the few positions that we're holding for a longer period of time right now. And we started putting that on last week.
That's, it's interesting you bring that up, and I won't show you a specific chart on it, but the 10 years, the 10-year actually completed an AB equals CD, very equal movement to a big Fibonacci number, 161%, or no, it's a 618 retracement over the course of several years. It just kind of all lined up, and we've been seeing a little bit of pullback in yields as a result. Do you think this is going to be something sustainable, or are you going to be looking to sell rallies in the bond market?
Well, our target for quite a little while was the next level up was 2.0 to 2.15. So, just stuck with our game plan, that we were looking for that over the last month or two for it to come in. And that's, I think last time we was even on, I might have been talking about with you, when you get these meltdowns in bonds in the first quarter from December to January, they're not 1-2 day events. So again, talked about patience early on in this conversation. That patience brought us opportunity, I think, to get into long treasuries. And I'm just starting to build a position there. Okay. And I haven't owned TLT and wealth management portfolios, not just futures, but I added TLT back into wealth management portfolios to a 2% allocation for the first time since March of last year. So I think we're seeing, I'm not trying to pick the bottom. I thought there was a good tradable bottom here, especially with the geopolitics, but I'd like to be able to build a bigger position in there for something here to go into the middle part of the year.
Awesome. Well, I think that's a great pickup right there. And let's talk about some of your more recent calls. You've really harped about crude oil making it to 100 and getting, here we are just, knocking on the doorstep of 100. But obviously it's been driven by, whether it's been, the Russia-Ukraine situation or what's happening in the Middle East with, what do you think is going to be the driver that puts us above 100? Are you pretty much content with this move? How are you going to approach crude from here on out?
Markets are extremely efficient. So I like to think when we get close to broader moves, per se, that's an S&P daily swing, and it's our research and our levels we put out. It comes within 1 or 2 points of that. I think that's a successive level call. For crude, I mean, I've been with you talking about this since crude was at $50, maybe.
Yeah,
calling for 100. So, I mean, I would say this is success here at this point. I'm not going to squeeze the last few droplets of juice from the orange, but I don't think it's overall. I'll take a quick victory lap on this $100, but what's the next move? And I think we won't see the top in crude until we see violent $5-10 days that cause some pain up near 120, 150, or even higher. However, what I'm looking for here on the future side, I'm not positioned at this moment. I'd like to see a slip back. I notice you have the front month ongoing continuous contract on. And one thing I'm looking more specifically in the April contract right now is that April high. April being front month right now, that was 93.83 was initial high, 93.50 was a closing high, and we sort of had this little quietly building flag pattern over the last couple of sessions, and then from that day, to last night, we spiked through that, sort of like a little bull flag that quietly built. Now we need to close out above those previous closing highs, previous high, 93.50, 93.83. May not happen today, but it really has to happen here the next day or two. Really, if we don't do it on a weekly basis, it's going to be susceptible to selling. I think the March contract rolling off could make it susceptible to selling, some repositioning. Obviously geopolitics right now, but we didn't wake up today and say, okay, Ukraine and Russia are going on. This has been developing for the last few weeks. So I think some of that's already priced in. I'm looking for a pullback somewhere, maybe, even as low as $85 to start repositioning. On my wealth side, I mean, we've been very overweight energy names. I've trimmed some names. We still are overweight, but just kind of trimming out a little bit at this moment in time and being patient, I guess.
Well, I have to say it's been a great call, and you're right. We're getting so close to 100. I could actually chalk that up as a win for you. That's awesome. But what I think is also awesome is something that you and I have been speaking about for probably the last 4 or 5 meetings that we've had together. And I'm just going to pull up spot gold, but we've been talking about gold, and we're like, what's going to make gold rally? I mean, we had all the reasons why gold should be rallying. And finally, we broke out of a nice consolidation. You could call it a triangle. You can call it whatever you want. But finally, gold made it, above 1850. And once it took off above 1850, here we go near, the highs that we saw back in the summer of last year, or spring of last year in 2001 or 21, excuse me. And so what do you think? I mean, gold, it took a geopolitical event to get gold up to these levels. Was it inflation? Was it a combination of both? And do you believe this move? Do you think we can go higher from here?
It's a great question. And I'd first say Russia and China have been buying gold hand over fist for 4 or 5 years now. And, I've said this last week. I think that people want to take stock picks from Warren Buffett. Why not gold strategies from Russia and China? I think that you look at, they've been buying, and why not be a buyer when they were? I mean, gold, 3-4 years ago, look where it was. So I think now, this geopolitical news is what may have helped it from 1850, 1860 up to 1900, but I don't think it's the only driver right now. So I've been telling clients over the past day, 1920, 1930 is great to see, but that is a rare major 4-star resistance. And so we use 1, 2, 3 stars typically on our research on a daily basis. 4 stars is very rare. I try to be very rare with those. It's a huge level. Sometimes they mean less about resistance or support on a second test and more about how tectonic a close below or close above could be. And I think a close above 1930 will be big. However, I don't necessarily really want to see it on a geopolitical swing. I would rather see it in the next month or two when it becomes more Fed driven. And I say Fed driven because obviously everybody's talking about inflation. Everybody's talking about the rate hikes. You even have all the banks out there talking about 6, 7, 8, 9 rate hikes this year. Listen, you have a probability of 175 basis points of hikes coming into this week of about 50%. To me, that's calling out peak hawkishness. I'm surprised we even got to that far, and everybody's worried about inflation. But really, you back it out, inflation at 1.4% last year in Q1 was the average CPI number, and then core CPI, and then you look at June through August of last year, that average CPI number core was 4.3%. So 7% inflation this, for January is high, but it's off such a low base comparison. We're not going to see 7%. And if we do, then we have some real big issues, but we're not going to see 7% this summer. So I do think the Fed is talking the big game right here. I think they'll get some hikes in, but I don't think we'll be anywhere near the amount of hikes that they're expecting. And then I think once we kind of move into the back half of this year, if we could see growth start to slow, and I think gold's really going to overall capitalize off the narrative of a less hawkish Fed. And again, the dollar likes to peak at the onset or early stages of a hiking cycle. Rates like to peak at the onset of early stages of a hiking cycle. Just the same way that rates bottom on the start of QE. So I think this is a big catalyst for gold, and that's the real undertone for me.
Okay, well, that brings us to one other topic that I wanted to bring up today. I'd feel amiss if we didn't discuss the S&P. I mean, here we are with the S&P. We're near some recent trend lows. We were down at these levels in January. We're back down here again. Now, today we kind of got, and today being Tuesday, the 22nd, and I know if you're watching this, you might be watching it a day later, but, we talked about, a lot of people talk about buy the rumor, sell the news. They're kind of waiting for Russia to do what they were going to do with Ukraine. A lot of people are viewing that it's not as bad as it could have been. If you're sitting there talking about that, maybe we've seen peak hawkishness from central banks, predominantly the Fed. Does that give us the juice for the S&P to get back towards the 200-day moving average, maybe back towards 4,700, or maybe even to all-time highs later this year? What are your thoughts on the S&P down at these levels? I think a lot of people are looking at it technically as being, we're kind of weak here, but do you buy into that argument, or are you more of a bull?
I am a bull, but first I'll say here I've been very cautious this year, and coming into this year talked about it's not going to be the same market that we had through much of last year. The Fed is going to be tightening, and on the wealth side we've really hedged out very well this whole move, and I think we're looking at the longer picture here, where if this may be the bottom this week, it may be a bottom 100 points lower. I don't necessarily know, and I'm not going to necessarily try. But what I do feel confident in is taking a look at that inflation narrative. So first, you have the Russia-Ukraine stuff that is driving prices today. But this sell-off didn't start with Russia and Ukraine. It started with the more hawkish Fed that was going to really pump the brakes on their easing and bring all these rate hikes. So I think all that is starting to get priced in, and now you just have this overall layer of geopolitics that could drag out for a bit. And China is probably going to be an aggressor on Taiwan. Now the Olympics are winding down. I think there's going to be continued geopolitics, but at the end of the day, I think the geopolitics will start to create a less hawkish Fed as well. So remember those CPI numbers I was talking about. I do think that we'll see inflation cool, and I think it will start to bring back the sense that this market is not going to ruin mom and pop, and the Fed doesn't have to make a decision between who are they going to save and who are they not. So overall, I think they're going to see a good opportunity to just look at building long-term positions. This is just I think a present to be able to buy the market 15 to 20% from its highs. And I think once we get through a lot of this over the next few months, I expect to see markets or the S&P at or near a record high by July through August.
Wow, that's going to be that's great, because there's a lot of naysayers out there thinking this is just the beginning of the end of the equity market. So to see us back at all-time highs or near all-time highs, second half of 2022 would be awesome for a lot of people, and I know that optimism is appreciated here at Trader Summit. And you know what, Bill? I love talking to you because you talk trader talk, and I'm sure a lot of people that are following and watching this right now that are giving you a thumbs up on the YouTube channel because they love this interview. They want to find out more about you. So how do I find out more about you as a trader?
Visit our website, bluelinefutures.com. If you get there's a link right there to check out our Blue Line Express research. I author the Morning Express. It covers the S&P, NASDAQ, crude oil, gold, silver every day. We put out midday videos. My partners, Philip Strebel, Oliver Slope, they also put out stuff on markets, ranging from FX to corn and cattle. So we have you covered. And just check us out and get in touch with us, whether you're looking to trade futures or have me manage a piece of your wealth and as a financial advisor.
All right. Well, I love you guys at Blue Line Futures. I had a great time having an interview with Oliver as well. He's awesome. And thank you for being part of the Trader Summit community. And guys, don't forget, subscribe to the YouTube channel so you don't miss any of the great content that Bill puts out on a daily basis. here on Traders Summit. And thanks a lot for being here with us. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.